This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets.
The discounts on Iranian oil offered to China have hit their widest in more than a year, as tightening sanctions on Russia and Iran squeeze buying from independent refiners already constrained by a shortage of crude import quotas, trade sources said on Wednesday. The United States, Britain and the EU recently imposed a wave of trade restrictions on top Russian oil producers and other industry players, aiming to pressure Russian President Vladimir Putin to end the Ukraine war. The sanctions have prompted some buyers in China and India, the two biggest Russian oil buyers, to pause their purchases, causing a sharp decline in prices for Russian crude and adding unsold Russian shipments onto already ample Iranian supplies, trade sources said.
Oil prices steadied on Wednesday as investors weighed optimism over a meeting between the leaders of top consumers the US and China against an expected increase in production quotas from the next OPEC Plus meeting. Brent crude futures were up 11 cents, or 0.2%, to $64.51 a barrel at 10:20 GMT, while US West Texas Intermediate crude futures gained 6 cents, or 0.1%, to $60.21. China's foreign ministry said Chinese President Xi Jinping would meet US President Donald Trump on Thursday in the South Korean city of Busan.
Moving on to the top news in the energy sector.
US President Donald Trump's sweeping tariffs are set to raise operating costs, disrupt supply chains and weaken investment momentum for the oil and gas industry in 2026, a report published by Deloitte showed on Wednesday. The energy industry relies heavily on global supply chains and internationally sourced materials such as drilling rigs, valves, compressors and specialized steel are central to their operations. U.S. tariffs on these components and other key input materials, including steel, aluminum and copper, could increase material and service costs across the value chain by 4% to 40%, potentially compressing industry margins, the report said.
Newly imposed US and EU sanctions targeting Russia and its oil giants Rosneft and Lukoil have yet to disrupt physical crude shipments from the country's western ports, according to LSEG data and market sources. Despite weather-related constraints and sanction pressure, October exports from western ports of Primorsk, Ust-Luga and Novorossiysk are seen at about 2.33 million barrels per day. BPD, in line with Russia's revised monthly program, LSEG data shows and sources say. Russia's western oil exports are under pressure from new U.S. sanctions, sources say, as Urals oil loaded from the ports is purchased by India and Turkey, which are expected to comply with the new restrictions imposed by the West. Next, we have the top news in metal markets. Copper prices hit a record high on Wednesday as mounting mine supply shortages spurred the metal on after weeks of trading at elevated levels. 3-month copper on the London Metal Exchange was up 0.5% at $11,090 in official open outcry trading, having earlier climbed 1% to a record $11,147.50, beating the previous high of $11,104.50 set in May 2024. Miner Glencore on Wednesday lowered its 2025 annual copper production guidance to between 850,000 and 875,000 metric tons, versus 850,000 to 890,000 tons previously, exacerbating concerns over mine supply.
Silver premiums in India have fallen sharply as demand eased following the last 2 weeks' festive rush, prompting potential buyers to delay purchases, bullion dealers told Reuters. Earlier this month, premiums in the world's largest consumer of silver climbed as high as 10% over official domestic prices amid strong demand, forcing some physically backed exchange-traded funds to temporarily suspend new subscriptions. The rush to buy silver is over, demand has slowed, and premiums have returned to normal levels, said Chirag Thakur, chief executive of Amrapali Group Gujarat, a leading silver importer.
We will now look at the top news in the agricultural sector.
Chicago soybean futures fell on Wednesday as U.S. farmers took profits after prices climbed in the previous session to their highest level since July 2024, fueled by optimism that China and the U.S. may reach a deal on soybean purchases. Corn and wheat futures also slipped. Both contracts had tracked soybeans higher in recent sessions. The most active soybean contract on the Chicago Board of Trade was down 0.5% at $10.89 minus 3/4 a bushel at 11:52 GMT, after rising as high as $11.08 on Tuesday.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.